April 2nd, 2025, President Trump announced something called reciprocal tariffs. This means a minimum 10% tariff on goods from all countries except for pharmaceuticals and microchips. Just 3 days later, these tariffs came into effect. China, not one to back down, retaliated by raising tariffs on U.S. goods to a whopping 125% and halted rare earth mineral exports. U.S. tariffs on Chinese goods have now hit a staggering 145%. This is a huge escalation in the US-China trade war. Now let's break down these tariffs a bit more. There's a universal 10% tariff on almost all imports, even from countries that were once free trade partners like Australia and South Korea. China-specific tariffs? We're talking 125% plus a 20% surcharge on items linked to fentanyl. And just a few days ago, Trump paused some tariffs for 90 days, including those on the EU, Vietnam, and Sri Lanka. But remember, the 10% baseline tariff still applies. Sector-specific tariffs are also in play, a 25% tariff on all car imports, steel, and aluminum. But smartphones, computers, and semiconductors are exempt. And good news for our neighbors, USMCA-compliant goods remain tariff-free. So, how is this affecting the global economy? Stock markets initially panicked but saw a relief rally with the pause on some tariffs. But experts predict more volatility ahead. U.S. consumer sentiment is at its lowest since June 2022, with inflation concerns rising. The Federal Reserve is now expecting weaker growth and higher inflation due to these tariffs. On the currency front, the euro has strengthened as investors move away from U.S. assets. And globally, corporate investment is taking a hit due to uncertainty from these tariff policies. Specific countries and sectors are feeling the heat too. The U.S. imported $440 billion of goods from China last year, and these tariffs will significantly impact trade between these two giants. The UK faces a 10% tariff on most goods, a 25% tariff on cars and steel. Vietnam's export-driven economy is also under pressure with a 10% tariff still in effect, despite a pause on the 46% tariff. And US soybean farmers? They're up against a 135% Chinese tariff. The automotive industry is shifting gears. Take Volvo, for instance, moving production to the US. And other industries like maple syrup, olive oil, and beer are also grappling with these changes. Public opinion in the US is divided. Some see Trump's moves as a fight for fairness and patriotism, while others worry about rising prices and unclear trade plans. Trump's economic approval ratings are sliding and politically things are tense. China even rejected a proposed call from Trump. Globally, countries are responding. The UK has suspended some import tariffs, Thailand is cutting tariffs on US corn, and European travelers are canceling US trips due to these policies. So there you have it. Trump's trade wars are reshaping global markets in profound ways. The full impact remains to be seen, but one thing's clear. These are tumultuous times for the world economy. Thanks for tuning in. If you found this insightful, don't forget to like and subscribe for more deep dives into current events. Catch you in the next one. Cheers.